Hello, it's Sarah Beckham-Huff in the Reattached office explaining today what hard money financing is. I work with sellers a lot. Typically, if you're a buyer and you're in investment, you will know what a hard money loan is. It's a funding mechanism that is used most often for flips or for quick renovations that involve a subsequent refinance after the value of a property has been stabilized. For sellers who are selling major fixer-upper properties, it is a form of real estate financing that you will run into. So what the heck is it? A lot of times, agents and buyers will present the offer of hard money financing as cash. It is not cash. It's somebody's cash. It's not yours. So it's a kind of mortgage. So how it works is it's not from a bank. So there's typically a family or an individual who has cash sitting around and they decide, hey, I'm going to be a lender and go into lending relationships with folks under terms that are pretty freaking advantageous to me. The hard money loans are characterized by having very high interest rates, short terms, and really hardcore foreclosure language around the documents and contracts that you're signing. So always be forewarned and be aware that it can be a very risky type of loan. It's also called equity financing, hard money financing, or bridge loans. Effectively, what's happening is somebody who has a little bit more flexibility than a traditional bank lends to a buyer for usually what is a pretty high interest rate, 11 to 13%, sometimes more, with the concept being that they will take that money. A lot of hard money lenders will fund, let's say, 65% of a purchase price and then 90% of any renovation costs after the purchase. So they will help purchase the property with a pretty high down payment, but then they'll also help cover the cost of a renovation. That when you're paying 13% interest, you are going to do a fast renovation as fast as you can because you went in and out of that loan. And then after the renovation, the buyer will sell the house and then pay off that hard money loan with the proceeds of the flip. And hopefully if they did a good job, they will be making some money, unless this is like a perverse hobby that somebody has adopted. It's a business move and you're trying to make money. Or they will refinance the house in doing what's called a cash out refinance. So they will go to a traditional bank and say, hey, I want a 15, 25, 30-year mortgage, whatever, on this house, and I need to take some value out of it. They will pay off the hard money loan and then either leave their additional equity in the house and coast along and rent it or whatever, or they will take some additional cash out of the house, which are their proceeds of the sale. I air quote it quite aggressively because you're paying interest on that money that you take out. Then folks will go and make that money work harder for them in a way that on a deeply theoretical covers the interest from the previous refinance mortgage. In thus a way, many folks have gone down the path of BRRRR investing, buy, rent, rehab, repeat, which works occasionally, and most of those individuals grow up to be internet gurus, and then the other portion of them grow up to be well-adjusted adults, and then the remainder of them F it up along the way and grow up to be disillusioned, small-time landlords. So, whatever, there's a lot of different ways, and there's always cautionary tales involved. Real estate is full of risk, and I am always very realistic about that, just like any other investment mode or method. Needless to say, that is what a hard money loan is, and it can be a great way for a seller to get out of a property that would otherwise never have the option of selling via a conventional mortgage. And even for a house for which a 203K renovation loan would be really complicated just from a paperwork perspective, where speed and getting the value out of the property are a priority. Accepting an offer from a hard money lender or a buyer who's using a hard money lender, I should say, can be a great option as long as you know what you're getting into and how it works, and also understanding that the buyer afterwards will have a world of work that they're responsible for, but that you are no longer attached to. So I hope that's a helpful commentary. Happy to expand and talk on it more in the future. See ya. Bye-bye.